All right, we do have breaking news, big economic news. New jobs numbers in just minutes ago. Let's get right to CNN's Matt Egan for the details here. 73,000, that's a miss, but it only tells part of the story.
That's right, John. Look, we learned that the job market is slowing down. It's losing steam a lot more than we realized. So, yes, 73,000, that's how many jobs that were added in July. That is significantly below the 115,000 that was expected. The unemployment rate went up. That was expected from 4.1 to 4.2. That's relatively low. But as you're alluding to, we saw very significant downward revisions to the prior months. So June was revised sharply lower. Previously, the government had estimated that the economy added 147,000 in June. This new estimate is just 14,000. That is a very weak number, John. That's actually the weakest month of job growth since December of 2020 during COVID. May was also revised sharply lower to just 19,000. It had previously been at 144,000. So we're talking about, and you could really see it on this chart, a major stalling out of job growth during May and June. July, it did pick up, but again, look at how much lower it is than it had been in the past.
Yeah, that's a 3-month average of about what, like low? I mean,
it's low. And what I think is notable is when you look at some of the industries here, okay? Manufacturing lost 11,000 jobs during July. The previous months were also down. That's pretty striking when you think about it, because why do we have historically high tariffs, right? They're trying to boost the U.S. manufacturing industry, but what we're seeing is manufacturing is actually losing jobs. Federal government lost jobs as well. Also, a number of other goods-producing sectors lost jobs. The good news is that private sector hiring, it did pick up in July, but it does remain at a relatively low level. And I also think it's just kind of helpful to zoom out, right? We came into this week and we said it was going to be a pivotal week for the economy. And I got to say, I think indicator after indicator has turned out worse than expected, right? I mean, we saw that core GDP really showed that the U.S. economy slowed down during the second quarter. Yesterday's inflation report, the Fed's go-to inflation number, that heated up, right? It was a 4-month high. We're seeing that the prices for goods have gone up, possibly because of tariffs. The Federal Reserve seems less inclined to cut interest rates, and the president continues to just spike tariffs. So you put all this together, and I do think that all of these developments are just going to increase concerns about the U.S. economy.
So May and June, 2 of the lowest months of jobs growth we've seen in 5 years.
Since COVID, absolutely.
All right, Matt Egan, thank you very much for that. We'll let you go dig more here because there are a lot of fascinating numbers here. This is a report that I think will be making news over the course of the coming day.